What is going on, everyone? Welcome back to the channel. Today is April 2nd, 2026, and let me tell you, today's market session is absolutely extraordinary. We have Nike imploding in one of its worst single-day drops in decades, Intel surging on massive volume, energy giants selling off hard, and Eli Lilly quietly making a move. We have 5 major stocks with massive price action, huge volume, and critical technical levels all converging on the same day. Whether you are a trader looking for setups or a long-term investor trying to figure out if now is the time to buy the dip, this video is everything you need. Let's get straight into it, starting with the biggest story of the day, Nike. Alright, let's talk about Nike, because this is absolutely stunning. Nike is down 15.5% today, trading at $44.63, and it is sitting right at its 52-week low. Let me put that in perspective, the stock was trading at $80 just earlier in this 52-week window. That is a 44% drawdown from peak to trough, and today alone the stock is getting absolutely demolished. Now let's look at the volume, because this is telling. Today's volume is over 113 million shares versus an average daily volume of roughly 39 million. That is a volume ratio of nearly 3 times normal. This is panic selling, institutional distribution, or a combination of both. When you see that kind of volume on a down day, you have to take it seriously. Technically, the picture is brutal. Nike is trading below its 20-day moving average of 53.60 and well below its 50-day moving average at 59.09. The RSI is sitting at a jaw-dropping 22.4 that is deep in oversold territory. Historically, an RSI below 30 signals potential exhaustion of selling pressure, and at 22 we are in extreme oversold territory. The last time RSI hit these levels on Nike, it preceded a meaningful bounce within 2 to 4 weeks. However, and this is critical, the 200-day moving average has now converged exactly at today's price of 44.63. That is a major dynamic support level, and the fact that we are testing it right now on enormous volume makes this a make-or-break moment. If this level fails to hold on a closing basis, the next identifiable support from a longer-term chart perspective drops significantly lower. What is driving this? Nike has been dealing with a perfect storm: weakening consumer spending, inventory issues, competition from upstart brands, and strategic missteps in digital. A recent earnings warning or guidance cut may be the fresh catalyst today, but the structural concerns have been building for months. For long-term investors, this is a name worth watching closely. Nike has a 29 PE ratio, a globally recognized brand, and a history of recovering from drawdowns. But you want to see stabilization in price and volume before committing. A 3-month price target of $52 represents about a 16% bounce from current levels if the 200-day holds as support. Rating this one as speculative buy at current levels with high caution. Support is right here at 44.50, and resistance above is at the 20-day moving average around 53.60. Now let's flip to the other side of the ledger and talk about Intel, because this is a completely different story. Intel is up 8.84% today, trading at $48.03, on volume of 129 million shares versus an average of 92 million. That is a volume ratio of 1.4, elevated, but not extreme. This tells me this move has conviction behind it without being a pure short squeeze or panic buy. What is remarkable here is the 52-week range. Intel was trading as low as $17.67 just months ago. It is now at $48. That is a 170% move off the lows. Something has fundamentally shifted in the narrative around this company. Let's break down the technicals. Intel is trading above its 20-day moving average of 45.07 and above its 50-day moving average of 46.24. That is a bullish alignment. The stock is in short-term uptrend territory. The RSI is at a healthy 56.1 that is not overbought, it has room to run. The 200-day moving average has converged at today's price of 48.03, meaning we are at a critical inflection point. If Intel closes above the 200-day convincingly, that is a powerful technical signal for further upside. Now, there is one notable metric I want to address: the PE ratio is listed as 0, meaning Intel has not been profitable on a trailing basis. This is a company in heavy restructuring mode, investing in foundry capabilities, cutting costs aggressively, and pivoting its entire business model. The market is clearly pricing in a recovery. At a market cap of $241 billion, investors are betting on the future, not the present earnings. The catalysts here are significant. Intel's foundry business, potential government CHIPS Act funding, and yes, M&A speculation around the company have all been swirling in the market. A deal involving Intel at these prices would be transformative. That said, even without M&A, the technical setup is constructive. A 3-month price target of $54 aligns with the 52-week high at $54.60, which represents about a 12% upside from here. Rating this a buy with medium confidence given the lack of earnings visibility, but the technical breakout is undeniable. Support sits at the 50-day moving average near 46.25, with resistance at the prior high of 54.32. Moving on to the energy sector, and Chevron is under meaningful pressure today, down 4.59% to $197.41. Volume is running at 23 million shares against an average of about 15 million, a volume ratio of 1.52. This is above average selling, which tells us there is institutional participation in today's move lower. Let's look at where we are technically. Chevron is trading just below its 20-day moving average of 199.44 barely, but it has slipped underneath it today. It is well above its 50-day moving average of 186.92, which is the key medium-term support level to watch. The 200-day moving average converges at today's price of 197.41. Again, we are right at that critical long-term trend line. RSI is neutral at 50.7, which tells us this is not an oversold panic situation, it is more of a controlled pullback from recent highs. The 52-week range tells an interesting story. Chevron was as low as 132 just 12 months ago and reached 214.71 at its peak. This pullback from the highs is about 8%, which within the context of that massive move is relatively mild. What is driving today's weakness? Energy stocks broadly are selling off today, likely tied to concerns around global oil demand, OPEC production decisions, or macro headwinds including a stronger dollar. Chevron specifically carries a P of 29.78 at current prices, which is not cheap for an energy company if oil prices come under sustained pressure. However, Chevron's fundamentals remain strong. It is a diversified supermajor with a track record of capital discipline, a strong dividend yield, and a balance sheet that can withstand oil price volatility. The 50-day moving average at 186.92 represents the key bull market support level. As long as we hold above that on any further weakness, the longer-term uptrend remains intact. 3-month price target is $210, representing about a 6.5% upside if energy stabilizes. Rating this a hold with high confidence, great company, but wait for the dust to settle before adding. Support is at the 50-day near 187, resistance at the recent 6-month high of 211.15. Now let's talk about one of the most important stocks in the entire market, Eli Lilly, ticker Eli Lilly, up 3.78% today to $954.52. Volume is running at 6.2 million shares versus an average of 3.5 million, a volume ratio of 1.77. That is nearly double normal volume on an up day, which is a bullish signal. Let's set the context. Eli Lilly has a market cap of $854 billion, making it one of the largest companies on the planet. The PE ratio of 41.66 reflects significant growth premium. The market is paying up for this company's position in the GLP-1 obesity and diabetes drug market, which some analysts project could be $1 trillion market this decade. Technically, the setup is interesting. Eli Lilly is trading above its 20-day moving average of 943.66. That is a positive signal, as the stock has reclaimed short-term momentum. It is still below the 50-day moving average of 999.60, which is the next key resistance level to clear. The 200-day moving average converges at today's price of 954.52 for the second time today across our stock list. We are watching a stock test its 200-day MA, this time from below trying to reclaim it. RSI at 45.1 is neutral with room to move higher, which is constructive. From a range perspective, Eli Lilly hit a 52-week low of 623.78 and a high of 1,133.95. We are currently trading roughly in the middle of that range, down about 16% from the 52-week high. For a company with LLY's growth profile, that represents a potential accumulation opportunity. What are the catalysts? Tirzepatide, the active ingredient in Mounjaro and Zepbound, continues to generate blockbuster revenues. Pipeline readouts, international approvals, and manufacturing capacity expansion are all near-term catalysts. Today's bounce could be tied to positive clinical data, analyst upgrades, or simply the stock finding a floor after its recent correction. 3-month price target of $1,050 represents about 10% upside in getting back toward the 50-day moving average. rating this a buy with high confidence given the secular growth tailwinds. Support at $944, the 20-day moving average, with resistance at the 50-day near $1,000. And finally, let's close out with ExxonMobil, ticker ExxonMobil, down 5.23% today to $160.78. Volume is 37.9 million shares versus a 29.7 million average, a volume ratio of 1.27. The selling is elevated but not extreme, suggesting this is more of a sector rotation or macro-driven move rather than a company-specific crisis. The technicals here are actually more constructive than the headline number suggests. ExxonMobil is trading above its 20-day moving average of 159.07, barely, but it is holding above it. It is significantly above its 50-day moving average of 150.085, representing nearly 7% of cushion to that support level. The 200-day moving average is at today's closing price of 160.078. The stock is right at this critical long-term trend line. RSI at 60.3 is the highest RSI of any stock on today's list, which means even after a 5% down day, ExxonMobil is not technically oversold. It was running hot before today's pullback. The 52-week range is massive context here. ExxonMobil was at $97.80 at its 52-week low and hit $176.41 at the high. Despite today's drop, the stock is still up 64% from its 52-week low. This is a stock in a powerful uptrend that is taking a breather. With a PE of 24, ExxonMobil is reasonably valued for a supermajor with diversified upstream and downstream operations, significant Permian Basin exposure, and a strong capital return program. The Pioneer Natural Resources acquisition has strengthened its long-term production profile considerably. Today's weakness is almost certainly tied to the same macro pressures hitting Chevron energy sector headwinds, potential demand concerns, and perhaps profit-taking after a massive run. The 50-day moving average at 150.85 is the key level to watch on any further weakness. As long as that holds, the bull case is intact. 3-month price target of $175 represents about 8.8% upside from current levels and is just below the 52-week high. Rating this a buy with high confidence, sector pullback, not a breakdown. Support at the 20-day moving average of 159.07, resistance at the 6-month high of 171.47. Alright folks, that is a wrap on today's top 5 stocks for April 2nd, 2026. Let's do a quick recap of the ratings. Nike is a speculative buy at these oversold levels, Intel is a buy on the technical breakout, Chevron is a hold wait for energy to stabilize, Eli Lilly is a buy with high confidence on the GLP-1 growth story, and ExxonMobil is a buy on this sector pullback. As always, none of this is financial advice. Do your own research, manage your risk, and never invest more than you can afford to lose. If you found this analysis valuable, please hit that like button, it genuinely helps the channel grow. Subscribe and ring the notification bell so you never miss a daily market breakdown. Drop your questions and your own analysis in the comments below, I read every single one. See you tomorrow, and as always, trade smart, stay disciplined, and we will talk soon.